Buying your first home is thrilling and exhausting at the same time, but a huge miscalculation a lot of people do is they think that they only need to save up for the down payment. This is false, and it is crucial to understand the closing costs involved in a property purchase here in British Columbia and how it can significantly affect your budget. What's up guys, this is Ashmeet Malhotra with Stonehouse Realty, and I am your go-to realtor for anything and everything related to residential property purchase here in the Lower Mainland. Today I will be going over closing costs related to a property purchase here in BC. So whether you're a first-time homebuyer or not, this video could be helpful for you. And if you enjoy the video, don't forget to hit the like button and subscribe to the channel. So without wasting more time, let's get into it. The banks like to see an extra 1.5 to 2% of the purchase price in your bank account on top of the down payment as closing costs. And this is just an average, but the actual cost can depend upon the kind of property you buy. So for example, if the purchase price of your property is $1 million and you're planning to do a down payment of $200,000, then the closing cost that you need to show in your account is roughly $20,000. So this brings your total to $220,000, and this is the amount that the bank would want to see in your account. Today we will be going over the following closing costs: legal fees and disbursements, property transfer tax, GST, mortgage payment premium, appraisal fees, home and fire insurance, home inspection costs, and property tax adjustments. Legal fees and disbursements. This includes lawyer fees and a bunch of other things. Lawyer fee is the fee that you pay to the lawyer to transfer the title and the ownership in your name. Disbursement includes costs related to title search, pulling the strata documents, and any other strata property costs. Another legal cost that you should pay is for the title insurance. The title insurance is usually a one-time payment of $250 to $400, but it's really important and it protects you and the lender from any kind of title fraud, any survey errors, any undisclosed liens, etc. So overall, the total legal fees comes to about $1,300 to $2,200. The next one is property transfer tax, and this is a big one. Property transfer tax is related to the purchase price of the property, and it's calculated as follows. It is 1% of the first $200,000 of the purchase price and 2% on the portion between $200,000 up to $2 million. And if you're purchasing a property above $2 million, then it's 3% on the price above $2 million. For example, if the purchase price of the property is $1 million, then the property tax is $2,000 on the first $200,000 and then $18,000 on the remainder, which is $20,000. There are a few property tax exemptions if you meet all of the following criteria. You're purchasing a property as your principal residence and you intend to stay in it yourself. If you're buying a resale property, then the threshold for the property transfer tax as of 1st April 2024 has been increased from $500,000 to $835,000. So if you're buying a property which is $835,000 or less, you are exempt of paying property transfer tax on the first $500,000. This exemption is only for first-time home buyers. For a newly built home, if you're buying a property which is $1.1 million or less, you are exempt for the whole amount. And the newly built property tax exemption is for everyone, not just first-time home buyers. And the third one is that the size of lot that you're buying should be less than or equal to 1.24 acres. The next expense is GST. GST stands for Goods and Services Tax, and this applies to any new product that you buy here in BC, including a property. It is equal to 5% of the purchase price of the property and is usually included in the mortgage amount. The biggest confusion around GST is what categorizes as a new house. It could be a newly built house sold by the developer, it could be a pre-sale, it could be an assignment of contract, or it could be a home built in the past, ready to move in but was never occupied by the original buyer. The next cost is mortgage insurance premium. Mortgage insurance premium applies to all property purchases where you as a buyer are doing less than 20% down, which is also known as a high ratio mortgage or an insured mortgage. The lender is making you get insurance because you're doing a less than 20% down payment, and this is the premium that you are paying for. This costs about 3.1 to 4% of the mortgage amount depending upon the percentage of down payment you are doing. This is included in your loan amount, hence in your monthly payment. You can only do less than 20% down if you're buying a property which is worth less than $1 million. And this is not a first-time home buyer incentive. You can continue to do less than 20% down as long as the purchase price is less than $1 million and it's your principal residence. The fifth cost we're talking about is appraisal fees. The lender will usually hire an appraiser to determine the fair market value of the property that you have purchased. They want to make sure that the value of the house that you're purchasing corresponds to the market value. This costs between $300 and $450 and is paid by the buyer. For insured mortgages, the lenders sometimes do an auto appraisal based on the recently sold. Next closing cost is home or fire insurance. This can vary considerably depending upon if you're buying a detached property or a strata property. Every strata is required to have a strata liability coverage, which covers the common areas and the building exterior. But you as a buyer of the strata property need to get a condo or townhouse insurance. This includes dwelling coverage and coverage of your personal property. This also covers any deductibles under the strata liability coverage. Strata property insurance can cost between $40 to $100 a month. But if you're buying a standalone home which doesn't come under a strata, then you need to get a conventional home insurance. This insurance covers the entire structure as well as your personal properties. This costs between $150 to $200 a month for a standard detached house. Next one is home inspection costs. Home inspections are not necessary and it totally depends upon the kind of offer you are putting. If you're putting a subject-free offer, then you're probably not getting a home inspection done, or you might get a pre-inspection. But in my opinion, getting a home inspection done is really important. It only costs about $300 to $600 depending upon the size of the property, but what it can do is help you understand the current condition of the property that you are buying, especially if it's a little bit older. It can also tell you if there are any upcoming issues or expenditures in the near future. For example, if there is a roof that needs to be replaced in the next 5 years, or there is some structural damage. This can really make or break your decision to buy that property, and it can save you thousands of dollars in the future. The last one on my list today is property tax adjustments. Here in BC, property taxes are paid on July 1st for the full year, from January 1st to December 31st. So if you buy a property before July 1st, then the seller owes the buyer. And if the purchase date is after July 1st, then the buyer owes the seller. This calculation is done in the statement of adjustments by the lawyer and is adjusted in your down payment. These are the 8 big closing costs that you need to account for when you are planning to buy a house. But you should budget for a few more things, and you should save up a little bit more to add some cushion. If you think this video was informative, then don't forget to hit the like button and spread the word. And if you're in the market to buy a property now or in the future, click the link in the description and book a call. It's never too early to start getting prepared. Once again, I am Ashmeet Malhotra and I look forward to working with you.